Hi everyone, my name is Tim Rays. I'm the Managing Director of Aussie Expat Home Loans. I want to thank you all for joining us today for what is the first in our monthly property update series. We work with some of the best property agents and developers in the business, and part of that is we get a lot of great intel and knowledge about what's happening in the market back in Australia. I really wanted to develop a series online where we can bring some of that knowledge to you and give you access to some of that really great intel and just give you more of a feel about what's happening every month back home, because every expat wants to know what's happening with the property market. My first guest for the series is Hamish McIntosh. He's the founder of One Haven Property Group, which is based in Melbourne. Hamish started his property career in 2015. He founded One Haven in 2020 with the ethos of helping investors navigate the complexities of the Aussie property market and help clients devise long-term wealth creation strategies through property. Some of you may also know Hamish from his previous life as a Cats and North Melbourne AFL player. And Hamish is also currently the director of Footy Smarts, which is a group that helps develop junior AFL players, coaches, and clubs. Hamish, I want to thank you for being our first guest on our property update series.
Thank you, Tim. Thank you for having me, and thank you for the kind words, mate. I'm looking forward to having a good chat today with you.
Hopefully it's a good summary of you. So
it was a kind summary, mate. It was a kind summary. My football career was, mediocre at best at sometimes, mate, but appreciate the kind words as well.
Still better than what most other people can do, Hamish. So. I couldn't even kick at 5 feet, I think, so I'm not one to judge.
Neither can I.
To start off with today, I thought it'd be really good just to do a kind of around the grounds update of what's happening in each of the markets back home. And I know there's been some recent CoreLogic data that's come out that I'll bring up that we can maybe talk to as well.
Perfect.
Just bring that. So maybe if you want to start with maybe the key markets, Sydney and Melbourne would be a good way to go.
Perfect. Yeah, thanks, Tim. As I said, thanks everyone for obviously listening today. As I said, I head up and run the business at One Haven, and we'll go through a bit of data today, give you guys a bit of a brief overview of what's happening in the Australian market. And there's no doubt it's a pretty interesting time across Australia. And look, I'm going to go through this slide now, but the market's probably never been as more segmented as it is, as I've seen in terms of some capital cities that compared to others, and there's some real variant reasons why the market is getting really impacted. But to give you a brief overview to start, guys, you can see on the screen, this is the last 12 months rolling average of how the market's been performing. And as you can see, pretty self-explanatory. Yellow is capital cities, and obviously the blue is the regional centres. You can see in the last 12 months, Perth, Adelaide, and Brisbane, and Sydney at a pinch have been going incredibly strongly. That's a huge amount of growth in the property market if you've bought well. You look at Perth, close to 20% growth. Adelaide and Brisbane, pushing 15, 13%, and Sydney close to 9%. The regional centres as well have been going pretty strongly in the Queensland, South Australia, and WA market. The reasons for this, guys, if you're wondering, is there's no doubt price point is king at the moment in the market with high interest rates, cost of living pressures, everything that's happening out there at the moment. That people's BCs have dropped, so people want more bang for the buck, right? And clearly there's better value in the Brisbane, Adelaide, and Perth markets, simply being because of their median price point.
And by BCs, we mean borrowing capacities, Hamish.
Borrowing capacities for everyone.
Definitely higher rates have affected people's ability to borrow.
Yeah, and you look at those Brisbane, Adelaide, and Perth markets, they're half the price essentially of Sydney. Sydney's been in price points close to over $1.6 million. Brisbane, Adelaide, and Perth, they sort of skim between $750 to $850, $880, in around that range at the moment. So you can imagine what you get for your value for your money. The second point I'll make is obviously cash flow is king. People want to buy an asset but not affect their lifestyle too much. Three of the strongest rental markets in Australia at the moment, obviously, are Brisbane, Adelaide, and Perth. We're seeing this at the moment with record low vacancy rates. At the moment, Adelaide's vacancy rate is sitting at 0.3%. So is Perth. Brisbane's hovering about 0.8%. A lot of our capital cities' vacancy rates are actually sitting well under 1%. To give you an idea how serious our housing shortage currently is at the moment, which is also having a huge impact not only on capital growth, but obviously driving up our rental growth. This is really important for clients when they're buying investments at the moment, because people want, they want the numbers to stack up and look good. And naturally, the best investments for numbers that we see as a business is no doubt in those three markets at the moment. Melbourne and Sydney are starting to lag a little bit, where it's getting a bit too much to essentially hold these assets, especially when you throw in some other factors. In the Melbourne market, like around land tax and these things at the moment, it's making it pretty difficult to justify buying those investments. But as you can see on the screen, it's pretty powerful data that there is a pattern arriving and a pattern emerging around what people want at the moment. Cash flow and obviously price point are the two opportunities. So these states are proving the value at the moment, and that's why we've been putting a lot of clients into those markets.
For sure. Yeah, I think especially it's been interesting to see just how strong the growth's been in Brisbane and Adelaide at the moment. Perth's what, it was 16% last year, and I think it's gone up another 5% already this year.
Yeah.
It's been, yeah, it's, I don't know. It'd be interesting to see how sustainable I think that is as well, Hamish.
Yeah.
I think compared to some of the other markets in the country, Perth's always been a bit more boom and bust as well. But
it has been. Sorry to cut you off there, Tim. So it definitely has. That's why it's not why a market we really get too heavily involved in, because of the fact that everyone sort of performs at it. You can make a lot of money over there, but also can flatline like any market. And look, the realism is Perth at the moment. It is the hottest market in Australia. Look, on CoreLogic at the moment, they did a report the other day where it's taking about 11 days on average to sell a property in Perth at the moment. Once it gets listed, that's incredibly dangerously low levels. You can imagine you're paying to get into that market at the moment. Whereas Adelaide and Brisbane, there's a little bit more supply, and obviously in terms of timeframes of stock selling, you're not paying as much as a premium, but don't expect to get anything under market value at the moment in those markets. You want as close as you can to on market value to maximise the growth that's going to, is predicted to happen still over the next, short to medium term, and that's why we're doing so much work in those two markets.
What do you think is driving the growth in Perth at the moment? Is there a lot of migration going over there, or is the employment market there been really strong? Because I know typically in Perth, when things rise there, it's because resources and the big miners and the big companies are doing a lot of hiring over there. Has that been the case at the moment? There's been other drivers.
It's definitely all those points you covered off there. And look, one of the main things we're seeing at the moment is just the lack of supply in general, right? It's driving a lot of our reasons for growth in all our states. What's happened through COVID, Tim, is a lot of builders and developers went broke. Unless people living under a rock, everyone will be aware of that in Australia lately. And the other point is a lot of builders and developers didn't build or construct a lot of development through that time because of the uncertainty of pricing. So that's why we're seeing this really undersupplied market, because builder developers have been sitting on it, and when construction prices go up 30 to 40%, it's been really hard to justify these developers bringing these sites or apartment developments to actually to fruition, because it's not making any money. The other point around Perth was quite strong was obviously the fact that price point in the value for money sort of 18 months ago when the boom started, or 24 months ago, you're getting in there at mid fours and to high fours for a really house and land option or established property. That market's moved pretty quickly, but there's no doubt that price point opportunity which people were seeing, they were maximising that because people's BCs, or borrowing capacities, I should say, had really dropped. Realism was years ago, you're getting borrowing capacity at 2%. You're now getting serviced at 6.5% plus the buffer. I think it's about 3%.
3%,
so 9.5%. So people's borrowing capacity dropped so much, they're going to markets where they can afford. And there's only so many markets you can go to hit that 500, 600K sweet spot. And really now it's Adelaide and Perth. Brisbane's nearly tapped out in the areas you want to go. That's what's been driving the market predominantly, the lack of supply, price point, and obviously other factors you outlined before.
I think it's also interesting to hear your point. From what I see and from some of the articles I read, it seems like investors are really coming back into the market at the moment too, because obviously with the rental crisis that we've got, rental yields, the average rental yield we used to estimate on places in Sydney, Melbourne and Brisbane would be around like 3% at the most, maybe 2.5%. But I know for clients that we see that are buying in Adelaide and Brisbane at the moment, minimum 4.5% yield, maybe 5%, depending on the property. Melbourne, it's really patchy. It depends on whether you're buying a house or a unit, but I've seen units in Melbourne that are, leasing for 5.5%, 6% now, which I think just really shows the constraint on the rental side. But do you think that'll also, do you think that's also bringing investors back into the market a lot more strongly than they were before?
There's definitely reasons for the investors coming in. I think obviously number one is the RBA. There's been a lot of talk from the RBA around the cash rate and interest rates dropping. Usually the natural reaction from people when they hear about rates dropping is they know the fact that property is going to continue to boom. That's usually
FOMO comes in. Yes.
The general conversation at the family barbecue on Sunday. It's a good time to buy. It's the groundswell of momentum. And I basis that off as a business for us around inquiry. Tim is the biggest thing because we have basically many people contact us directly, or the other way around when we're calling our referral partners and see where we can help. At the moment, it will be a 90-10 split. 90% of people calling us, referral partners, clients calling us to assist. That usually means that there must be some good, positive conversations happening out in the environment or in the workplace that people are wanting to buy because they're coming to us. So for me, that is showing some good opportunities. So that the rate drop's a big sign in terms of this, and obviously the undersupply, which everyone again would be aware of what's happening in the world. There's an article every week either on the news or on the paper around our supply shortage, but they're just not hitting these targets and what we need to do in regards to building enough homes.
Yes.
Obviously not getting access to people to get money to even build these homes at the moment. And obviously the compression on migration that's happened over the last 12 months into Australia as well. There's just a ripple effect of everything, but we haven't solved the nuts of the issue around the fact that we just don't have enough supply and we're not building enough supply to obviously essentially help with that market. There was a government announcement about 6 months ago now, I think it was, or maybe longer, that they wanted to build 1.2 million new homes over 5 years in Australia. Obviously, government were going to assist with that. And CoreLogic brought some data out a few weeks ago around that. And then for the month of February, there was only 12.5, so just under 12,500 new dwellings approved, which is about 60% behind target where they need to be. To give you an indication of how we're going in catching up in this housing shortage, that's where we're still sitting. We're still a fair way behind, yet we're still at migration in. Still obviously creating babies and making families. And then you throw in the ripple effect of people now getting more access to money and coming off the fence looking to buy a rates drop. All those people are going to come to buy, but we have no supply. And we're obviously a very short market, which is obviously, as everyone would know listening to this call, that drives up property growth. It's a simple mathematical equation in property supply versus demand. And that's what's going to drive up your growth wherever you go. There's obviously different factors we go into more detail around, but that simple point will make sure you make money in the market if you buy well.
I get that question almost every meeting I have with people is, when do they think the market's going to drop, or is there a bubble and is it going to crash? And my answer is, until they stop letting people into the country, it's never going to crash, to be honest. It's the supply demand curve is already so far off that, even if they did stop all migration tomorrow, it's still going to take years for it to catch up to where it needs to be for the amount of people that are there now.
It's a crazy stat on Domain at the moment. If you even jumped on now and had a look, Domain's, everyone's got a different forecast on what the vacancy rate is. CoreLogic's different to Domain. But if you jump on Domain right now, as of the end of Feb or March, the national vacancy rate on Domain was sitting at 0.7%.
Which is it must be the lowest on record.
Like every capital city is under 1%. Like that's how low our supply levels got. So selfishly, it's a great figure as an investor, because this is what keeps driving up your growth in terms of numbers for rent and all these things we've been discussing. But you'll be aware of the issues out there of our housing shortage, homelessness rate, all this sorts of stuff that's real out there. But I guess selfishly, people that work in real estate, this is a good thing if you invest, because you're going to make money off it simply because of those reasons outlined around supply versus demand. So there's no doubt. Then you then pick those minute markets as well, where you can make money even greater around price point and these other factors, and that's why those interstate properties for us have been pretty popular.
Yeah, for sure. I've got one more market question, and then we might just talk a little bit about interest rates. But the other question I get from a few clients is, the rest of the country seems to be doing okay. We've talked about Perth, Brisbane, Adelaide being really strong. Sydney had a really strong end of last year. I think beginning of this year, it's kind of getting a bit flatter at the moment. But Melbourne really hasn't seen any of the same price growth in the last 12 months that the other capitals have had. And I'd be interested to get your perspective of why you think that is, given demographically and given, especially from a migration perspective, Melbourne's the #1 city that migrants are moving to at the moment. Is it purely just a case of government policy, raising stamp duty, raising land tax, making it more expensive, or has there been other factors that have kept prices as flat as they are?
Yeah, it's a fair point you make, Tim. There's definitely, when you look at the stats on the screen, you would think Melbourne would go with the rest of Australia, right? Every other major capital city has performed and boomed, but why hasn't Melbourne gone? It's pretty self-explanatory at our end, is the fact that we were the most impacted city, mainly by COVID, right? And we obviously put builders and government grants and things to get the economy moving again when rates were 2%. And the market really blew, and you can tell by the right side of the screen there where the big Mount Everest cliff hits the top. That was really driven by grants in Victoria, getting people and those low interest rates. The realism is around that we have to pay back that debt as a state. So one of the main reasons it's happened in Victoria that's causing our sort of shortage and our decline in the market compared to the rest of Australia is they've essentially increased or decreased the land tax holding amount and for an investor. So it used to be 300 grand in Victoria, and then your land tax bill would start above that on your investor property land that you own in Melbourne. They've decreased that down to $50,000. So everyone's land tax bills in Victoria have naturally gone up quite substantially. Imagine the people that own multiple millions of dollars worth of land in Victoria. You can imagine how much the land tax bill is now digging into their feasibility on holding these properties. So that's definitely put the investor sentiment in Victoria on the nose. Right, big time. We can see it already. The other point around Victoria is there was a real lag, obviously, in regards to our rents. A lot of people moved away from Victoria, so our rental market was really impacted. There's no doubt the vacancy rate is low and rents are back catching up, but there is still a lag that happens from that. You just don't go back to originally what it was, right? Naturally, we're the highest vacancy rate in Australia there for a while. And also just in general, Victoria, we don't have as great of returns on rent compared to, say, Adelaide and Brisbane and Perth for what you pay, right? We just don't get the same returns in terms of, so you can imagine that it affects your numbers on an investment when rates are sitting at 6.5%, 7%, and our gross yields here may only be 4% on some properties. Whereas in Adelaide and Queensland, they might be 5, 5.5, 6%, depending where you buy. Yeah, so again, that makes your out-of-pocket expenses. That makes the ability, when you look doing the numbers on the Victorian asset, you're going to be negatively geared by some margin. So you'd want to buy really well because the property's still costing you a lot of money to run. Right? Yeah. I'm not saying you can't make money in Melbourne, but you've got to buy well. You've got to buy well. Make sure you're obviously set up structurally correct, and be wary that you're going to have some holding costs until we wait for this market and the interest rates to come under control again. There's no doubt they are the reasons why Melbourne is on the nose. But in saying that, Tim, it's too big of a beast to stay where it is. Right?
It's still a great city to be in. So
yeah, right. So at some point, Melbourne will have to go again. And I don't know what that be. Will the rates drop? Will the government bring in some policy change to get it all moving? Who knows what the future holds? But Melbourne's too big of a city in general to stay dormant for too long. So as a business, we
still forecast to overtake Sydney from a population perspective as well.
Correct.
So,
correct. So you think that's only a short-term pattern until Melbourne comes again. That's why we're doing so much work as a business researching Melbourne at the moment, because we have to think this will go. When that will be, who knows?
Yes, if only we had the crystal ball.
Which we did.
I just wanted to give everyone a quick update on interest rates, because the other big question I get from all my meetings is, what are interest rates doing and where are they going and what's going to happen in the next 12 months? I think just to simplify, I guess, the forecast and what I really think is going to happen, the biggest indicator for the RBA of whether they're going to cut or move is obviously the inflation data. So the latest inflation data came out last week. It came in at 3.6% against what they were expecting it to be, which is 3.4%. So it was a little bit higher. There's been a lot of pundits this year about expecting that rate cuts will come in kind of September, November this year. I am a little bit more pessimistic, especially after the latest data. My feeling for this next 12 months is it's really just going to stay flat. There's not a lot of reason, there's not a lot of impetus for the Reserve Bank to look at cutting rates this year. Inflation is coming down, but it's not within their 2 to 3% forecast range. And by the RBA's own forecast, they don't expect it to get down to that range until mid to late next year. On the flip side, I really don't think that they're going to be increasing rates this year as well, or anytime soon. I guess, especially Hamish, you're on the ground there, and anyone that's in Australia, anyone you talk to, cost of living, price inflation, how expensive everything is the number one thing that anyone talks about at the moment. And I really think that, the RBA is not political, but I think they really feel that, just consumer discretionary spending is down. The current inflation that's happening is not being driven by people with mortgages spending lots of money in the economy. It's really being driven by, high rental costs. Education's been a really big inflationary factor as well. And then also medical costs have been going up as well. And these are not things that are driven by demand. They're driven by, the input cost to provide them. So, I really personally don't think it's going to be anything anytime soon. I guess, Hamish, how you all feel on the ground and what you talk to other advisors, is it pretty similar?
Yeah, there's no doubt doing this for 10 years, it goes through patterns, right, in terms of what emerges when you see clients. And, to the conversation we had 3 years ago with clients, they didn't really care about the cash flow, right, because rates were so low, they knew they were going to be fine. Now, when I see a client, you should see when we put the cash flow analysis on the screen. Their eyes have never been more closer to the laptop than what they were a long time ago. People can love the property, but they all care about the numbers now, because people want to understand how it's going to affect their lifestyle. Cost of living, putting their kids through school, whatever the reason is, they understand now it's a different world in the property market. Hence why, again, those cash flow opportunities are really relevant and important today, because in the end, the numbers are the most important thing for clients to understand, because they want to make sure their life is good. They're getting ahead of life and setting themselves up for retirement. But they also want the ability to enjoy life now. And there's no doubt that's what we're seeing when we see clients in terms of the conversations we're having.
Definitely. I'll just call out a few, put some rates on the screen for anyone that wants to have a look at. These are where the average rates on variable and a couple of fixed rate specials that we have at the moment for people. So if you're paying more than that and you want to see if there's any opportunity to do something better, then by all means, just reach out to us as well. If you're paying more than this, you're probably paying too much at the moment, but it's obviously dependent on your own circumstances too. Maybe, yeah, just a few more things that I wanted to chat to you about, Hamish. We've talked a lot about what the last 12 months have looked like and, where things are. Where do you see the next 12 months going in terms of, do you think there's still going to be strong growth in the places we talked about, or are there other opportunities that people should start to look at?
We're going off your advice there, and rates sort of sitting stagnant for a while. I think the market sentiment will remain in what people want around the cash flow and price point opportunities. So I do see the market remaining relatively strong just simply because of the supply versus demand issue that obviously we've been discussing. So until that gets rectified, I can't see how the market doesn't continue to perform up and go strongly in areas. Which areas, Tim? I guess for me, I'd still be pretty bullish on the interstate properties, and all the forecasting externally has been pretty similar in regards to growth to continue in those areas. I said the interesting one is Melbourne. As I said, it is a big beast. When will it go? Will it continue like this? In the end, we are quite a bit in debt, the Victorian market, the Victorian state in general. So there is a fair bit to pay back. So I can't see policies coming in the short to medium term to assist with that. A rate drop would really help with the Victorian market to have the cash flow look a bit better on those investments here in Victoria. No doubt. But I think in the short to medium term, Tim, in short, I do believe the market will continue to perform and go up when you look at the factors I've outlined today around the lack of supply across all of Australia at the moment. And we're still having solved issues around building enough homes.
Yeah. We have a lot of clients that have property in Sydney. So do you have any thoughts on Sydney for the next 12 months?
I still think Sydney will be a strong performer. Again, it's just the realism of the world of Sydney, the fact that it's $550,000 more expensive than anywhere else in Australia. Yeah. Right. It's a big difference. Yeah. So the realism, there's a lot more money in Sydney in general, but eventually hits a tipping point. The fact that rates are still 6.5% in Sydney as they are in Melbourne. So there's less pools of buyers or investors that want to buy into Sydney naturally when the rates and the ability to get money is less. So we probably 60% of our clients are from Sydney. Yeah. They come into all their budgets of 600 to $1 million. They know straight away, unless they want to buy an apartment in Sydney or somewhere a bit in the outskirts, they don't see the value through there. So they come to us and we put the different opportunities where there's better value. But in general, I do. It's a great performance. It's a really strong performing market. So you can't go wrong if you buy a property now and sit in it for 10 or 15 years. But if you're asking for short term, I think it has to plateau a little bit until the cost of living comes under control and rates start to drop back a bit.
Yeah. Got a lot of clients that kind of always try to time the market as well. Do you think now is a better time to buy? Do you think waiting a few more months towards the end of the year is going to be any better? Or I
always laugh that one around the timing of the market. I'm a big believer.
I know the answer. I just want to see what you're going to say.
I'm a big believer just to get in, because the reason being, if you make money now in the first 2 to 3 years, or you sit in a room and stagnant, then your boom starts on your property. The law of average, your property doubles in value, 8, 10, 12 years, right? Whenever the boom happens in that market, your property is already in that market, right? So then you can capitalize as soon as the boom starts beginning. If you wait until the boom begins, you're starting to pay a bit of a premium to get in, and it's also the nature and the issues you have about getting into that market, right? You look at these clients who've got properties all around Brisbane and Adelaide already, think how they've capitalized on that whole boom already before the boom actually begun. So you get in the seat and buy well, but I do believe there's still a really good bit of a period of growth to go and happen from here anyway in the market because of the reasons that's outlined today in our meeting. But the
amount of clients that I talk to that all tell me, I wish I bought during COVID, or I wish I bought at the beginning of COVID, like I planned to, and then I got scared. It's the reality. Again, my view and the reality of the Australian property market is, as long as there's still migration, as long as people are still moving there, as long as it's an attractive place for new migrants to come to, and Australia needs migration because we have some really big skill gaps that continue to need to be fixed. It's not going to crash. It's not going to go down. It might be flat. It might be stagnant. It might be like it is now, where sentiment is a bit low and people maybe don't want to list, or there might not be any crazy price rises now. But if you're investing for the long term, which property should be, it shouldn't be something that you want to sell in 5 or 6 years. It should be something that you expect to grow over the long term. It's not going to go anywhere else except up.
The good thing about property too, it's pretty hard to get it wrong. Like honestly, like you look at history, you've got so much data to support any investment decision you make. Like get a property, stick to a major capital city, get within a decent radius of that city, whether it's a townhouse or a house or whatever you buy, and the urban sprawl takes place. Land runs dry, population continues to boom around our major capital cities, but your investment will always remain at proximity to the CBD if you buy a good quality asset. You look at the history of that area on CoreLogic from 10 years ago to now, you can see it's gone up hundreds and hundreds of thousands of dollars. You bought a similar asset to what's been bought there 10 years ago, you go well. The issue clients have at the moment is just trying to get those assets because of the lack of supply. Once you're in,
they expect quick returns as well. Do you know what I mean? Like some things take time. You know, I grew up in a place called Cleveland in Brisbane, and you know, when I lived there and all through my childhood, places were worth 200,000, 300,000, 400,000 at most. And the last 5 years, my old home is like worth over $1 million now, and that whole area is like really popular, and everyone loves to live there. That's what I mean. Like demographically, if you're buying in a metro city and it's within a certain range of the CBD, just give it time. It will develop.
A good example is Melbourne, right? Look at Melbourne with Footscray. I'm throwing people in the Melbourne area called Footscray. Right? It used to be known as one of the dodgiest areas in Melbourne, right? I'm telling you, if people in the call listening to this haven't been to Melbourne lately and look at Footscray, you wouldn't recognise it. No. It's been developed. It's gone up. It's a really, really popular area now in Melbourne, and it's only 5 feet from the CBD. Yeah, right. It's a good example of how areas just change and gentrify over time. So you just sit in the seat and let it go up in value. Property's a long-term investment, as we know. But as I said, it's pretty hard to get it wrong. Stick to data, stick to growth, stick to where the urban sprawl, the land runs dry. Demand will always be there because we continue to grow as a country, as we know, and that'll always bring demand to make sure that your product and your property goes up in value.
And work with reputable property partners too, because the other way you can get caught is working with the wrong people and paying too much.
Absolutely, and that's what we're here to do: support you in every part of the process. We're pricing around quality, make sure everything's vetted through the process. That you buy not only a property good price, but make sure everything's covered off legally and build structurally across the board to make sure you're buying a good asset long term. Is going to cause you minimal headaches, but make you the most amount of we can.
Thanks, Hamish. I appreciate your time today. So for anyone that's looking for property back home, if they want to be put in contact with Hamish, or if they've got any other questions that they want to ask to us, by all means, just send us an email to our mailbox. It's just inquiry@aexphl.com. Thanks again.
Thanks very much, guys. Thanks for having Kim. And I said, anyone wants to reach out just for a chat and get a market update, always willing to have a chat and let you know what's happening in the world in Australia and all the markets to see what we can do. But I appreciate the time today.
Thanks so much.
Goodbye.